You have said that global warming has not increased Berkshire's payouts for weather-related events. Yet other insurers, including Travelers, have cited climate change as a risk factor that they use. Are Berkshire's models different? And if so, how?
Yeah. I've seen of course, the SEC requires you to put in all these risk factors, and the lawyers will tell you to put in, everything possibly you can think of, that you'll develop Alzheimer's or whatever it may be. I mean, they just want you to have a laundry list so that it's all been covered in case of later litigation or something of the sort. So people do put in weather risk, and maybe they put it in because they've got some model that shows it, but we price our business. Basically, we price it every year. It's not like a life insurance company. A life insurance company, you make a contract at so much $1,000, and if you buy whole life insurance, that you've set a price for, if you're 20, you may have set a price for 60 or 70 years in the future. But that is not the property casualty insurance business, which we're in. We set it 1 year at a time, and I see nothing that tells me that on a yearly basis that global warming is something that should cause me to change my prices a lot, or even a small amount. That doesn't mean that it isn't a threat to humanity or, and terribly important. It just means that if I'm going to sell a 1-year insurance policy and I'm going to sell it on a $1 billion plant, I may care enormously about the fire protection and various other kinds of protection within that plant. I may care about what's going on adjacent to that plant and all kinds of things. But I am not thinking about global warming. It does not change the situation in a material way in any 1-year period of time, in my judgment. And, if I was writing a 50-year windstorm policy in Florida, I would think very hard about what global warming might do in that case to the incidence and the intensity of potential hurricanes. But I do not think it has any material effect on the likelihood or the intensity of a hurricane in Florida or Louisiana or Texas or next year. So it is it's not something I would put in the 10K as a threat. Charlie?
I don't think it's totally clear what the effects of global warming will be on extremes of weather. I think there's a lot of guesswork in that field, and a lot of people like howling about calamities that are by no means sure.
Yeah, do you think, would it change your 1-year prediction as to what the rate should be?
No.
No, it wouldn't change mine either, so I don't really understand why they put that in there.
A lot of people get very invested in it. It's like a crazy ideology. It's not that global warming isn't happening, it's just that you can get so excited about it, you make all kinds of crazy extrapolations that aren't necessarily correct.
Yeah, look at it this way, Andrew. Would you change the rate for tomorrow on insurance because from the rate today for global warming? I doubt it very much. Now, would you change it for 50 years? Might very well. But I think that 1 year is much closer to 1 day than it is to 50 years in terms of focusing on that factor. So I do not want our underwriters to sit there thinking a lot about, in terms of writing a risk or at the price at which to write that risk. I do not want them thinking about global warming. I want them thinking about whether there's a moral risk involved and who owns the property. That can be very significant. There used to be one fellow called Marvin the Torch that if you insured Marvin the Torch, it wouldn't make much difference. His building was going to go. But Marvin had a marvelous way of looking at it, though. He said, I don't burn buildings, I create vacant lots.